As I mentioned, we're down 1.5%, but when I looked at what the DAX in Germany was doing, I thought, okay, we're not doing that badly relative to what we see in Europe.
Yeah, I think it's really more the resources that are taking the brunt of the fall.
Yeah.
Still a lot of selling coming in. I think it really is from overseas selling. I think a lot of concern on the resource side. We had China data out this morning, which disappointed the market. It showed a reading of about 47.5, which is a contraction, a figure below 50 is contraction.
The HSBC PMI number that was
correct,
out.
yeah. So I think a lot of concern around that. And I think what's interesting to note is that markets generally price in a question that's being asked whether or not China will have a hard landing. I think the markets are somewhat telling you that they are in for a hard landing. So yeah, I mean the resource sector, of course, so we are a resource heavy market and taking the brunt of the fall, and of course the likes of Anglos and the gold shares continuing to perform poorly.
Yeah, Anglo American 289, it's down just over 2%, but one stock that is sticking out for me today on the top 40, and that's Aspen. It's up 1.5%, 125 Rand 25 cents. And that is because of the company buying the OTC drugs from GlaxoSmithKline on Friday. Great news for the company. Are you bullish on the stock?
Yeah, very. And having a look at the trend, technically, it's been in a solid uptrend. Ever since it broke 100 Rand, it's been in a steady uptrend. At 118 Rand, the news came out that they were going to acquire these OTC products from GlaxoSmithKline, and it rallied about 6 or 7% on the news on Friday. And today, again, one of the only stocks. I think it's somewhat, of course, very much defensive in nature. And at the moment, I think anywhere to put cash besides in the resource sector is at the moment looking very attractive.
I saw David Shapiro from Sasfin a little earlier today, and he was telling me, Eleni, remember, buy a stock when it's high and sell it when it's even higher.
Correct,
is this a momentum play for Aspen? I mean, is this a fundamental play? What is it going on with this stock?
I think not just with Aspen. I think with the whole industrial and the industrial sector, as well as some of the retailers. And there's been a huge sectoral swap out of resources into those stocks. For example, Mr. Price trading at all-time highs, breweries trading at all-time highs, the likes of Naspers as well. A lot of the retailers, continuing their momentum up, and the resources are continuing their downfall. So I think it's a more safer play. The more defensive stocks, the likes of BTI as well, British American Tobacco, stocks that are paying good dividends. And the likes of Goldfields, Anglo Gold and Harmony performing poorly on the back of weaker gold price, and just don't want to be too exposed to the whole sector.
You mentioned BTI. Is that a buy for you? It's doing quite well.
Yeah, it's actually, I think it's traded all-time highs today, around 410 Rand 50. So again, steady uptrend. It's got a great dividend yield. No exposure, of course, to the resource sector. So money flowing out of that sector into the likes of BTI and some of the other stocks that I mentioned, but yet very defensive in nature, BTI.
Yeah. So let's touch on SAB Miller, which is down just over 1%, and that's sitting at 324. Changes at the top management. Lots of news coming through with regards to beer volumes up around 3%. Yeah. Africa looking good, spending money in the continent.
It's a fantastic business. I wouldn't read too deeply into the 1% move to the downside today. Again, also trading at all-time highs in the last couple of days. I think 330 Rand was all-time highs. And the change in CEO. The CEO is Graham Mackey's to step down in the middle of next year. I think the COO will take over for a period of time, and then they're appointing the European chief to take over the business. But nonetheless, I wouldn't be too concerned with the management shake-up. I think, looking forward, a great business, and they do say that they don't see themselves as a takeout target at the moment, which is somewhat quite interesting. But nonetheless, again, very defensive in nature, great dividend yield, great business, good volumes going through the beer sector.
Goldfield sitting down 1.3%, and one of the companies that most people are very excited about because they're expanding further into Peru. Are you excited on this company?
Not as a long-term investment, no. I think gold shares are probably the worst investment, for a long-term hold in a portfolio. We could debate this for hours, but nonetheless, it's trading at currently PE of about 10, which historically is very cheap in the gold sector. Dividend yields aren't great. And on Goldfield specifically, there's a lot of support around the 85 Rand level. So hopefully it'll find its feet there and start to reverse and have a bit of a relief rally off those levels. But I think there's still a lot of foreign selling coming in across the board in the resource sector, specifically in the platinum shares and the gold shares. And Anglo Gold also trading down to a very big support level. A long-term support level, and the likes of Harmony, looking dismal as well. So again, I think it's moving out of that whole sector into the more defensive shares.
Pre-listing statement: Hermans and Roman out today, and the largest property IPO ever. Interesting, also expanding further into Africa, something we actually haven't seen by other listed property companies in South Africa. Is this stock interesting you at all?
I think so. I think the fact that it's one of the biggest real estate IPOs, or not one of the, it is the biggest real estate IPO on the JSE. As you said earlier, 2.04 billion rand. I read the statement that they released, or that was in the press, and they've got huge sites into Africa, and they've got a huge dividend yield. They anticipate to have a huge dividend yield. So from that perspective, it is very attractive. The dividend yield they expect to be in the region of 8.5%. Which is way higher than a lot of the other property companies. Tough space to be in, but perhaps listing at the right time. And as
would you be interested in this stock?
I would be. I think it's a good long-term play, specifically for the dividend yield, firstly. And secondly, the fact that they are expanding and listing at such a time in the market when interest rates are at their lows. And your previous guest, as I just alluded to, he said that they anticipate perhaps a 1% or 2% increase in basis points over the next 2 years. They're still getting in 2 years before that time, so there's still a lot of room for growth. And you know, the space is very competitive, and it's a tough space at the moment. But I think nonetheless, it's a very interesting business and very tight management. They're not actually issuing stock to any private investors. It's more to institutional investors, and the PIC is taking a really large stake, which also speaks for itself.
Okay, so let's delve now into the resource space. We touched on it earlier. I'd like to talk on Kumba Iron Ore. I know that a few directors selling a few stocks today, nothing too dramatic, but the stock is down around 3%. And again, we're worried about this whole emerging market Chinese growth story. First quarter production up 15%. What is your view on Kumba?
Yeah, it was up 15% to 10.1 million tons. There's been a lot of talk about iron ore. You know, if it's topping out, if the bubble will burst there from China. So I think a lot of people are looking to China to see if they will have a hard landing. I think it's crucial to the whole resource sector. But nonetheless, I mean, it's only 15 or 20 rand away from all-time highs as well. So it's been very resilient. Kumba along with Exxaro are the two shares in the entire resource sector that have been totally resilient to the downfall of the rest of the stocks. So I think Kumba is a great business. I think the demand will remain still for a period of time. Hopefully it doesn't drop off too sharply. And you know, if it were to drop off, you know, hopefully gradually, that it doesn't affect them too much.
So what is your view on construction stocks? And I say this because Murray & Roberts' rights issue was oversubscribed, which is supposed positive news coming through. Is it slightly too early?
Again, I've discussed construction shares so many times on TV, and I've always said, you know, the construction shares were really hit down the last couple of years, and they never recovered at all. And I said that the cycle, you know, it's a very cyclical industry, and the construction sector should turn. And you know, it has started to turn. It's starting to look a little bit better. Again, I think when...
And obviously you've got to look at the actual books that they've got, and then also just take a look at the margins.
Yeah, and then we look at governments, and then we look at, you know, the normal story, government spend and how much government, you know, say that they're going to pump into certain projects. And you know, the order books do look good. They really do. Wilson Bailey Homes, of course, you know, probably the top performing property stock on the market with the best management. But nonetheless, Veng and Murray & Roberts, great businesses as well. Murray is now issuing stock totally oversubscribed. It just shows. I don't know. I wonder if it's because the issue was at 18 rand. I think, you know, trading at 28 rand, it's a huge discount to the net asset value and to where it's currently trading. So I think in the long run, I do like the construction shares. You might be able to still pick them up at current levels for a long period of time. When I say long, maybe the next year or so.
So you haven't picked up any construction as yet?
Look, I think one has to have a toe in the construction sector at the moment.
Where is your toe? Tell me the company.
I think Wilson Bailey Homes would be the best investment for the long term in the construction sector. Veng's got the steel component as well as the construction. Murray & Roberts I like. I think, you know, they've got a lot of issues, but I think they're trying to work through them. So the new CEO that's come in the past year or so, trying to turn things around, trying to pay off the debt. So, you know, hopefully something positive will come from there.
All right. Also, very quickly, what's happening in France, in Spain, presidential elections?
Yeah, geez. So Sarkozy is facing stiff competition. And of course, there's concern that, you know, if he weren't to be re-elected, because he's had such close ties with Germany to try and solve or somehow lend a hand to the whole euro crisis. So if he weren't to be elected, they're worried that those ties with Germany might be broken. So it's quite a big fear in the euro, you know, region at the moment. Geez, I don't know. I wish I'd be a politics commentator to give you a bit more insight on that.
Obviously, this is going to affect the economics.
Yeah, well, I mean, that's why the markets are very nervous again at the moment. So with regard to Spain, whether they go into recession or not, I mean, Europe's got so many problems, and you know, it's going to be a long haul before they.
Fantastic, Daniel. We have to leave you there. Thank you so very much for joining us. Great to have you in studio.